Hello and welcome everyone to this morning's Daily Market Report brought to you on behalf of CommunityFT for CommunityFT members, in which we're going to take a look, folks, at some major movements potentially to occur over the next 24 hours. But before we do that, at this point, if we can all embrace a quick risk warning. So if, guys, we can familiarise ourselves with the information in front, engage as much as is possible, simply so that hereafter any decisions you make in your trading are of a fully informed nature. Okay, so on the cards for us this morning, everyone, let's take a look at some economies, the value of those economies as is reflected by the value of their currency. And let's also take a look then at some commodities. Okay, so to help us do that in a more detailed manner, let us switch to a platform for a more in-depth inspection. In front of us, what we're looking at now is the daily chart of the euro versus the sterling. And what we witness here, or what we observe, is the strengthening of the sterling over the last given period of time, which can also reflect, or does reflect, the simultaneous weakening of the euro. Now, in terms of how to interpret this, let's talk a little bit about that technically, okay? Because some of us would be aware of the various fundamental factors that may have caused this move to occur, but we want to look at the technicals in this particular session. So let's take a look then at the chart's behavior or interaction with the 100-day exponential moving average. We see that this particular indicator seems to be relatively accurate with respect to signaling support and resistance for the market, or signaling breakouts to either the long or short side. And we know that relative accuracy is not enough in the long term, and we need something with high accuracy. So what we can use to help us with the accuracy is the stochastic oscillator in order to confirm those positions or the assumptions we're making with respect to that market. So if we were using the oscillator to help us see where the market is overbought or oversold, and if that occurs simultaneous, of course, with the market crossing the 100-day exponential moving average, that's an example of how two indicators coupled together can almost help with more accurate entries. Okay, now what we're looking at, guys, is the daily chart of soybean. Okay, and I just want to thicken one of the lines here to make it more visible. Okay, so what we're looking at, guys, is the commodity channel index, the average true range, and the chart overlaid with a 55-day exponential moving average. Okay, now let's talk about all these together and what they can mean. Well, effectively, guys, in this particular case, the market fared very well, or one trader would have fared, or a trader would have fared very well had they have taken the position signaled by the 55-day EMA and maybe using the recent sloping back down of the commodity channel index in order to confirm that assumption. But since then, things haven't been so good, and we can see in the commodity channel index there's been a lot of ranging occurring. And the question is, for the trader, okay, how does one trade this particular style of market? Well, what you could say is that any trader doesn't need to trade this particular style of market or develop a ranging strategy. And there's two reasons for that. First and foremost, if you have a sufficient trend trading strategy, it doesn't need to be done at all in terms of profits. But secondly, okay, if you are someone who would like to make as much income as possible by putting in the least amount of effort, you can administrate a trend trading strategy, and because of the time frame in which trends develop, that can be a hell of a lot more helpful than using, let's say, a ranging strategy. So, in terms then of looking at the 55-day EMA, the commodity channel index, we can say that in this particular case they've been completely inaccurate. So let's look at a solution with regard to those problems. And what we're looking at here, guys, is our own custom built indicator here at AFT, which is the parent organization of CommunityFT. And we see that this particular indicator has been accurate with respect to signaling breakouts. So we see that we made a lot of profits here in this particular case, and we've made further profits here. And we wouldn't have taken a lot of positions actually in this particular case because of the filter we use for taking positions. So as a result, and coupled also with our strict risk management, we maybe would have made approximately 2% loss here, while on this particular trade we made approximately, given that we scaled in also, about 10%, and so far on this particular trend we've made almost about 3%. And you can see how that's an overall winning scenario by doing a quick little bit of maths there. So we hope that's been of help and given you an insight into a winning system. If you have any further questions, please do not hesitate to get in touch. We welcome all inquiries. Have a great day, and we'll see you tomorrow.